Hello everyone, and welcome back to the channel where we demystify the complex world of finance. Today, we're diving deep into a fascinating corner of the market, how to borrow stocks and the mechanics behind a potential short squeeze. Specifically, we're putting a unique spotlight on a healthcare company that recently popped up on our screeners, BJDX Inc., ticker symbol BJDX. This isn't generic analysis, we're breaking down the specific numbers and factors making BJDX a stand-up right now. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show company logo / stock chart. Let's zoom in on BJDX Inc., or BJDX. This is a medical diagnostics company operating in the critical healthcare and medical devices sector. They're developing what they call the Symphony technology platform, which includes an analyzer and single-use protein detection cartridges designed for measuring key diagnostic biomarkers in blood. BJDX currently holds a market cap of about $1 million, making it a micro-cap player. Now, looking at the recent price action for BJDX, we've seen some interesting movements. Today alone, BJDX is up a notable 10.99%. Over the last 5 trading days, the stock has gained 12.22%. However, if we stretch that out to the last 30 days, BJDX is down 16.53%, indicating some volatility but a recent positive shift. Volume-wise, BJDX saw significant activity today, trading over 10.29 million shares. That's a substantial jump when you consider its 30-day average volume sits around 4.57 million shares. This gives BJDX a relative volume of 2.3x its average today, meaning today's trading volume was more than double its usual activity. What is cost to borrow and why it matters? Before we get further into BJDX's specific situation, let's quickly explain a crucial concept, cost to borrow, or CTB. Show cost to borrow text on screen. When you short a stock, you're essentially borrowing shares, selling them, and hoping to buy them back later at a lower price to return to the lender. But borrowing those shares isn't free. There's a fee, and that's the cost to borrow. Think of it like paying interest on a loan. When a stock is hard to borrow, it means there's a limited supply of shares available to lend out for shorting. This scarcity drives up the cost to borrow, sometimes dramatically, even exceeding 100% on an annualized basis. Why? Because the demand from short sellers wanting to bet against the stock is high, but the supply of shares for them to borrow is low. A high cost to borrow is a key indicator that short sellers are facing increasing pressure. Why the stock is hard to borrow right now. So, why is BJDX on our radar as a hard to borrow stock? Our screen is picked up because its annualized cost to borrow fee is an astounding 745.4%. Highlight 745.4%. That is an exceptionally high number, signaling that short sellers holding positions in BJDX are paying a hefty premium to maintain their bets against the company. BJDX also has a relatively small estimated float of just 0.9 million shares. Explain float. The float represents the number of shares actually available for public trading. A small float means that any significant buying or sell-in pressure, especially from short covering, can have a magnified impact on the share price. While the exact number of shares currently available to borrow is unknown at this moment, the incredibly high CTB fee strongly suggests that borrowable supply is constrained. Our internal composite squeeze score for BJDX, which combines factors like CTB level, borrow supply, float size, and price momentum, currently stands at 40.5 out of 100. This score indicates a noteworthy level of potential, but certainly not an extreme one. Unfortunately, CTB momentum data was not available for BJDX at the time of our analysis, but the absolute CTB level itself is highly significant. Squeeze mechanics explained. Show animation of short squeeze concept. Now, how does a short squeeze actually happen? When a stock like BJDX becomes hard to borrow, and the cost to hold a short position becomes exorbitant, short sellers face increasing financial pressure. If the stock price starts to rise, perhaps due to positive news, increased buying volume, or just general market sentiment, these short sellers can get trapped. To limit their losses, or simply to stop paying those massive borrow fees, they are forced to buy back shares in the open market to cover their short positions. This act of buying back shares adds to the demand for the stock, driving the price up further, which in turn can force more short sellers to cover. This snowball effect is what we call a short squeeze. It's a rapid, upward price movement fueled by short sellers being forced to capitulate. However, it's crucial to remember that a high cost to borrow does not guarantee a squeeze. It can also mean that short sellers have very strong conviction in their bearish thesis and are willing to pay those fees because they anticipate an even larger downside move. Dilution risk check. An important factor to consider in any potential squeeze scenario is dilution risk. Dilution occurs when a company issues new shares, either through a secondary offering or other means. This increases the total number of outstanding shares, effectively watering down the value of existing shares. For BJDX, we've conducted our checks, and we found no recent dilutive SEC filings such as -1, -3, or 424B forms within the last 90 days. We also found no recent reverse splits for BJDX in our look-back window. This is a positive sign for a squeeze thesis because dilution can significantly offset or even completely negate the impact of a short squeeze, even with a high cost to borrow. New shares coming to market provide more supply for short sellers to cover their positions, or for new short sellers to establish positions without putting upward pressure on the stock price. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you watch for with BJDX? The exceptionally high 745.4% cost to borrow, combined with a small 0.9 million share float, certainly makes BJDX an intriguing case study. The recent surge in volume, 2.3 times its average, and today's 10.99% gain suggest increased interest. Should chart highlighting volume spike, keep an eye on continued volume strength and any further shifts in the cost to borrow or available shares. Positive news regarding BJDX Symphony platform or operational milestones could also be catalyst. Conversely, if short sellers maintain their conviction, or if market conditions for micro caps turn negative, the high CTB might simply reflect their strong bearish bet rather than an impending squeeze. The composite squeeze score of 40.5 reflects that while there are factors in play, it's not a definitive, all-out squeeze signal. BJDX Inc. BJDX serves as a compelling real-world example of a stock exhibiting several characteristics that can lead to significant short squeeze potential. Its extreme cost to borrow, small float, and recent price and volume momentum definitely put it on the watch list for those interested in these market mechanics. Understanding these dynamics is crucial for navigating volatile market opportunities. If you found this deep dive into BJDX insightful, please hit that like button, subscribe for more unique stock analysis, and let us know in the comments below what other stocks you'd like us to investigate. Thanks for watching, and we'll see you in the next video.